Meta's stock continuing to tumble this week after a disappointing report this quarter. Has the stock, though, and this is the question, reached a low point, low enough, where it's actually a good time to buy? Joining us right now is Stephanie Link, Hightower, Chief Investment Strategist, a CNBC contributor. You've liked that stock for a long time. Dan Flax, Neuberger Berman, Senior Research Analyst. Stephanie, so what do you think?
I think it's overdone, Andrew. I think there's piling on happening, and I also think there's a lot of emotion around the stock and the position. And I think you have to step back and say this stock is now trading at 16 times forward estimate, 7 times EBITDA for a company that's going to see high returns, total returns in the high teens. There's no question that the fourth quarter was disappointing, although they still put up 20% revenue growth, 21% total advertising revenue growth. Their DAUs and their MAUs grew year over year, and they are at $2 billion for DAUs and $3 billion for MAUs, so they're still size and scale. That being said, I get it. I understand lower guidance is not a good thing, especially when this stock is so over-owned. But I will tell you that they have a game plan with regards to Reels, and growing video, and they have pivoted in the past. And when they have pivoted in the past, it has worked. And so I am actually banking on this company getting it right. Is this going to make you money in the first half of this year? No. But in the second half, especially against easy comps, I think you'll make money.
Daniel, what do you think? I mean, there's a real question of whether this company is going to be a growth company. You looked at the numbers. If there's not new users joining the crowd, there's a problem. And then the question is it just a bet on the metaverse, which is you might as well buy be a venture capitalist at that point.
I think the company does remain important to users and advertisers. What I'm focused on is really their ability to innovate and transition it to a place where users are going to value things differently. So, for example, the video experience is becoming more and more important. Augmented and virtual reality, you touched on the metaverse, is going to become a bigger factor, I think, more towards the middle and the latter part of the decade, because the technology itself is still in the very early stages. For Facebook, they have made transitions before. I think what's a little bit more difficult this time is you have competitors such as TikTok, which have scaled and have a very good user experience. Specifically, Andrew, it's around this younger cohort, the teens, the 20s, and those audiences are often leaders in terms of where these markets are going to go. So Facebook has a lot of work to do over the next few years. I do not think the company is broken, though, and certainly the compares will get easier in 2023, but it'll take some time.